Hello, welcome back to the Instech podcast. Zoya podcast producer here. This week, Robin sits down with Alex Haar, co-founder and chief product officer at Parsyl. Parsyl is redefining supply chain insurance, using cutting-edge technology and data to better price, mitigate, and manage risks. Their focus? Essential supply chains, from food and beverages to life sciences and renewable technologies like solar panels. In this episode, Alex and Robin explore Parsyl's incredible journey, including their latest $20 million funding round led by Lightsmith Group, a private equity firm focused on resilience to climate change. With this investment, Parsyl is expanding its use of AI, IoT, and predictive models to deliver innovative insurance solutions. If you're curious about how technology is reshaping supply chain resilience and the future of underwriting, this episode is for you. Now let's dive into the conversation.
Welcome to this week's Instech podcast. For me, Robin Merttens, it's the first of the 2025 podcasts. And my guest today is Alex Haar. He's the co-founder and chief product officer at Parsyl. Alex, welcome.
It's great to be here. Thanks, Robin.
Now, we've had Parsyl before, and I've got the benefit of a press release to read from here. But Parsyl's an insurer of complex supply chain risks that uses enhanced data and technology to better understand price and mitigate risk. Parsyl leads the Essential Consortium at Lloyd's. It's a cover holder. You manage Syndicate 1796. And you offer a full range of A-rated cargo insurance solutions. You're based in London and Denver. Are you speaking to me from Denver?
I actually am the sole Parsyl employee near the Twin Cities in Minnesota. -10°C right now, I believe.
It's -1 here, and we're all complaining. That's the English for you. Now, you're the chief product officer. I'd be intrigued to know what a chief product officer does. And my line of questioning is that the insurance product? Is that the tech product? What's the day job look like?
It's a little bit of all the above. Every day is different for sure. At a high level, I work with my colleagues across the various functions to figure out what our vision is, right? And how we use technology and data to deliver that insurance coverage and the experience that you described, and do it, importantly, in a scalable way. It could involve, how do we deliver new coverage, leveraging the technology and data that we've developed or acquired. It could be how we provide a better, faster quoting experience powered by generative AI and large language models. It could be a better claims experience with improved workflow and extracting data automatically from claims documentation. So it really runs the gamut. It's a lot of ground to cover. So a big part of my job is the prioritization piece. So which of those investments are going to have the biggest impact on our customers, internal and external for that matter.
We've had you on Parsyl, that is, on the podcast before, and your co-founder, Ben Hubbard. That was 4 years ago. We called that podcast Cold Chains, COVID and Parametric. And they're exciting times because you were insuring COVID vaccines. So I guess not so many vaccines being shipped around these days, but you're still providing the same sort of AI-driven perishables insurance. Bring us up to date. What's been happening the last 4 years?
Sure. It's wild to think that it was 4 years since Ben was on your podcast. A lot's changed and not a lot's changed at the same time. So we're still focused on ensuring what we call essential supply chains, food and beverage, life science, and actually still vaccines, though, to your point, maybe not quite at the same level as we were during COVID. So we've expanded, though, into non-perishable cargo as well. So that includes things like packaged and finished goods, technology components, raw inputs, things like that. We really like specialized commodities that what we say create value for the world. So that could be anything from food like seafood to semiconductors to solar panels. But yeah, we're still using technology and AI to understand and underwrite those risks. We're expanding the amount of data via partnerships and other means that helps us do it in a unique way. Like I said, a lot has changed and not much has changed in those 4 years.
Interesting. Give us some metrics. I'd be keen for me and the listeners to understand, how big you are, how many people you've got, give us some idea of size.
Yeah, the last 2 to 3 years have been extremely positive for us. So we've had more than a 90% annual growth rate. That includes writing more than $60 million in our Essential Consortium that you mentioned since it debuted. We're performing well below our target for loss ratio. Like I said, we've expanded our capacity into non-perishables. We actually doubled our capacity for the Essential Consortium to 55 million. So yeah, and from an employee count perspective, We don't necessarily love that as a metric just because one of our big goals is actually to scale GWP without scaling linearly with number of people. So we like to focus on some of the other metrics instead.
Value. Listeners, I'm going to let you into a secret at this point. I prepared meticulously for this podcast, only to receive, not a day ago, less than a day ago, a little email from Alex and his colleagues to tell me that they had some news, being they'd raised $20 million Series C funding round. So whatever those metrics suggest that you're doing pretty well, and then that's what investment suggests you're doing pretty well. And it's a lot of money. Tell me what's going on.
Yeah, so late breaking news for sure. We're obviously really excited about the fundraise. We're excited about the ability to accelerate some of the growth that we just talked about, accelerate some of the investments in the technology and data acquisition that gives us an opportunity and some leverage to be able to move things forward a bit more quickly than we would otherwise. We're excited as well about the folks involved in the investment and their ability to help us as well.
Let me touch on that because I see it was led by Lightsmith Group, who I hadn't heard of before, but they're a global private equity firm. They focus in resilience to climate change. In the quote, they say climate change is disrupting complex supply chains. Parsyl provides clients with a dynamic solution to this dynamic problem. We're proud to partner with them. What's the angle? Why would a PE with a focus on resilience and climate change pick on you as a way to help solve the problem?
Yeah, it's a good question. Their mission overlaps pretty significantly with ours in a way that I think we're both excited about. Their mission is really about resilience, right? Especially resilience in the face of a changing climate. And the impact of a changing climate on essential supply chains is enormous, as we know. And so they believe, like we do, that insurance has a significant role to play in creating that resilience for supply chains. They're focused on data as well and how you use that data to create that resilience. And of course, they're excited about our growth, as you mentioned as well, and the ability for this round to help fund that growth.
I mean, from my point of view, it's nice to see people put their money where their mouth is. We speak to a lot of people, we pick up on a lot of themes. I can't tell you how often resilience, climate change comes up. I can't tell you how many people we speak to who are interested in investing in it, but that hasn't manifested itself as often as one would have thought. So it's pleased to see here a proper alignment of interest between the insurance industry and companies like yourself and then the investors. What are you going to spend all that money on? I can see you as the chief product officer, your eyes light up as you get this new budget. What are the priorities?
Part of it, maybe obviously, and from my perspective, I'm biased, is into that technology and data and all the things that differentiate us. So that's a big piece for sure. Hiring is also a big part of it. As we scale, we definitely have a combination of the human touch here with our underwriters and claims folks who are the experts and the technology and tools that we build for them. And so it's an investment in both.
I'm going to push you a bit on the technology side of things because you and I have had separate conversations about this. So you're sort of 7 or 8 years in. I'm sure that you've learned a lot about tech and the tech to use. There's nothing like experiencing it at the front line. From a tech point of view, is it a matter of more of the same, a refresh, you study again? What have you learned over the 4 or 5 years that would cause you to change the way you look at all that?
I would say not a lot has changed in our philosophy. I would say it's more building on top of what we've built already. So we've built a great foundation in terms of the technology and data and things like the data pipeline that feed into the models that we've talked about. Now it's really expanding as we scale and as we mature and as we grow. The tools don't always keep up in terms of being able to support that growth. So continuing those investments, continuing to invest across the types of models that we have, predictive models, continuing to invest in the workflow tools for the teams that I mentioned around operations and claims. So it's not as much of a philosophical change or change in the types of investment. It's more of an expansion and building on a foundation that we have already built.
To what extent do you do this yourself? And to what extent do you buy in? And how do you make those decisions?
We've built pretty much everything ourselves for what I would call the pre-bind part of our business. Think about everything from submission to quoting. We've built that ourselves. We call that our underwriting workbench. We have some AI tools behind that we can talk about. And then everything post-bind currently was buy, basically, versus build. And as we scale, we're always reevaluating what we build and what we buy. We're a little bit different from probably most carriers, just in terms of our origin, and we are a technology company, or at our core, right? We were started as a technology company and evolved into an insurance company. So we have maybe different viewpoints on the build versus buy decision. So we really think about it in terms of how strategic is it for us to build or to own that piece of technology when it comes to things like iterating quickly, when it comes to things like incorporating new data sources. How much do we want to rely on somebody else to provide that technology? I think there's a piece too where we're monoline, we're specialty, we're a lot of things that don't necessarily put us square in the target of a lot of the products that are out there. So that also obviously colors the way that we think about build versus buy.
I think that's a real thing, by the way. I can see more and more verticalization in the tech and data and the approach to it, by which I mean almost on a class by class basis, as people understand what's needed, the workflow is different, the data points are different, the analysis is different, and it's quite difficult to take generic tech and then roll it out across very specific, specialized us as a business. So you can see people starting to look more and more like, this is a vertical stack. What do I need from beginning to end for this class of business? I think it's something we're going to hear about more and more. Now, you were using AI before everybody was forced to use AI. Otherwise, people look down their nose. And you've been generally kind of pushing the cause for some time. You were, when we last spoke, very strong on these sort of predictive models as the basis of underwriting cargo. Is that still the core? And presumably after the last 4 years, your ability to predict gets better and better, doesn't it?
Yeah, it is still our core. And yeah, it's great to have the ability to, back to the build versus buy, we've built these models, we monitor their performance, and we can tweak them and we can evolve them over time as we grow, as we introduce new commodities from an appetite perspective. And that's very powerful. It's a feedback loop that is at the beating heart of how we think about underwriting.
I'd like to explore that a bit more. So just so I understand, because 4 years ago you had no Gen AI, you had no agentic AI. So the way you look at AI is, in terms of your predictive models, the new forms of AI don't change much for that. But the way you use generative AI is more in the operational aspects of your business. Is that a fair summary?
I'd say yes and no. I would say let's walk through the submission process as a good example that hits on both. So Gen AI really helps us structure all this unstructured data that comes in the submission process, right? So we get emails with a bunch of content in the email. We get a bunch of attachments of different kinds. They have information about the risks. Maybe it's a statement of values in a CSV, for example. Gen AI really can help us from that perspective to structure that data to then be an input to those predictive models. So it's really helping those predictive models have the data that they need to be able to do the prediction. But at the same time, it's Gen AI doing that structuring, not a person. And so it's also helping us from a workflow perspective. So we get 2 bites at the apple, which is really great.
I also want to talk about something else that's gone out of fashion a little bit, which is IoT. You're one of the first. I was one of these people who made a lot of noise about IoT and dynamic data sets and the ability to use it for parametric solutions and or better risk management, risk mitigation type things. But you don't hear it come up in insurtech conversations quite as much. If I'm honest, I don't see many insurers using it. They're so poorly set up for those real-time data sets. Are you still believers? Are you still, is IoT still in there somewhere? And if so, what for?
Definitely still believers. Still believers in technology and data, including IoT, but not limited to IoT, to better understand risk, right? We're actually continuing to expand sources of monitoring and other data that we use for our models. But you're right, most insurers don't have the capabilities they need to make use of the data. I think what makes us unique is that was our origin story, right? Was around IoT and data and how we turn that data into insights. I think we're positioned slightly differently than most for that reason. And the capabilities don't apply just to IoT data, really. It's any data source that can help us improve underwriting, risk management, claims. I think what I've really learned over the course of the last few years is, yes, AI, predictive models, those are things that differentiate us, but really it's the capabilities and the cultural aspects from an organization perspective to apply that data, to collaborate, to understand how to make use of that AI in a really practical way is really, I think, our differentiator. And it might be tools like AI or other things, but at the end of the day, if you can't use those tools, they don't have any value.
You talk about other data sets there. Give us some examples of data. I know new sources emerging all the time.
So we are always looking for data that can add value to our models, to our insureds, let us be more creative around coverage in terms of adapting to specific nuance of our insureds to give them the best possible coverage and pricing. Our data partnership program is a big part of that. So we've got all the major temperature monitoring IoT companies as part of that partner program. We're expanding that to include other companies as well. So we're always on the lookout for folks who are in supply chain related data. So please reach out. We also have a partnership with Lineage. So they're the largest cold storage company in the world. So customers who store their goods with Lineage can get a discount. We can work with them on their policy a little bit differently than we might otherwise be able to. And we use our internal data too and public data sets. So the internal data is an interesting one. As we grow, we have more and more of our own data to be able to do things like measure the success of our predictive models. So that's been very valuable. And like I mentioned, a bit of a flywheel. The more data that we collect internally in terms of things like performance, the more valuable those models get, and the more accurately we can evaluate the risk, and therefore the better coverage we can provide.
I hear all that, then I think to myself, so what are the underwriters doing? And I actually have a secondary question to that, which is, you need to select your underwriters quite carefully on that basis. You're a very strong data science, you've got these predictive models. What is the underwriter, the true underwriter function look like? What do they do versus bots, human in the loop?
Good question. So there's always a human in the loop. So submissions are reviewed by our underwriters as well as our operations team from a data perspective. So really, we're not replacing that expertise, but we're giving them tools to be more efficient and creative and use their unique skill set. So I describe it as a bit of an iceberg. So under the water is all the data science work, all the data pipeline, structuring the data, proposing technical ratings based on that data. Above the water is the underwriting workbench, which is where they can develop quotes and change them based on what they know and about the customer, about the market, and things like that. So we're really just providing those tools to them so that they can spend more of their time thinking about what is the best coverage, what happens if I change these deductibles, and things like that, as opposed to worrying about the administrative aspect, like entering all the data into the system and worrying about whether it's correct. And like I mentioned, that kind of above the water piece is as big of a challenge as the data science piece, especially we're giving underwriters more data than they're used to. There's an overwhelming aspect if you just say, here's all this data we've collected, here you go, versus here's some insights that we've derived that might be relevant in this context. So use your creativity and your experience and the human aspect of this to turn that into a quote and to get that quote over the line.
You're talking about something which most people are aspiring to, and it is nice to hear that it's doable. I think it helps to start with a blank canvas like you did all those years ago. You don't have to build on legacy. But for people like me, this is just music to my ears. So look, you've got to stay ahead of the competition here. What does 2025 look like? You've got money. You've got this brilliant foundation. What are you going to do to push on?
We have big plans as always. So continuing to invest in the technology as we've discussed, continue growing our existing business. So expanding our footprint in the US. We're hiring underwriters in the US, if you know anybody. And then we're in the early phases of introducing new insurance products focused on those essential supply chains as well. And then really a lot more of the same growth, right? So really still the core of what we do is those essential supply chains, continuing to grow there.
Anyway, the Instech community can help. They can help you recruit. Is it your recruitment more US based than the UK at the moment?
Yes, but we're always interested in talking to folks in the UK as well. Hiring is a big one. Jobs@parsyl.com is our email address, or go to parsyl.com. We're always looking for data partners to add to our data partner program. Folks who are working in supply chain data definitely can reach out as well. And always interested in talking to folks who are doing interesting things at the intersection of technology and data and insurance. There's a lot of interesting conversations to be had about the applied aspect of this versus the academic aspect of it. And so I'd love having those conversations with people who are in the trenches and doing it and finding success.
So you don't want to hear from lots of consultants who can write a smart essay on how to use generative AI, you'd like to hear from somebody who actually has implemented it for something. Is that what I heard?
I think it's a mix, right? I think it's always interesting to read the papers about the possibilities and things like that, but it's once that collides with reality, it doesn't always hold up.
You're being far more diplomatic than me. Look, we always do this on our podcast. You've just told a very intriguing story, and a lot of people will be very interested. Is there one particular thing you'd like to leave the listeners with? If you take away one thing, what would it be?
I would say the trends that we're talking about, data-powered policies, claims, use of AI, they're just going to accelerate more and more. So understanding that those tools are just a piece of that puzzle and they're a means to an end, I think is going to just be more and more important. And I think it's going to require insurers and everyone in the market to think a bit differently about how they approach things like hiring and cross-team collaboration and even how they're organized to take advantage of those tools. If they can do that, I think there's an enormous opportunity to be had. You mentioned us being able to work blank slate, and I think that is definitely a big part of it, right? So I use banking as an analogy, and you've got banks who, in an attempt to modernize, hire technology people. I've had experiences in other industries where they're layered on top of something that already exists with an attempt to modernize, versus thinking differently about how you hire and mix those smart people from different industries together to create something net new or to evolve into something net new. And I think we're definitely in the latter camp, and that's exciting. And I would say if I leave one thing, is think about the cultural aspect of that. Not just the technology and tools aspect of it, because they're just as important.
From my point of view, you incorporate so many of the things that at Insect we are evangelical about. I appreciate that for some it's not as easy to implement as others, but you are really a paragon of what these things ought to look like, and it's great to sit and listen to you and Ben and talk about these things and actually show that they work and to make success of a business built around them. And well done, by the way, on raising all that money. There's a good Series C round. It puts you in really good stead. It's a great story. So please pass my congratulations on to Ben and to all your colleagues. And then on this basis, we'll have you back in 4 years' time. And then I'm expecting unicorn status by then. What do you think? Unicorn in 4 years' time?
You're too kind. I can knock on wood over here. We are very excited about the years to come and where we've gotten to so far in the last 4 years. And we're always grateful to have the chance to talk about it with you, Robin.
Congratulations. Nice to have you. And thank you for your continuing support for Instack.
Thank you.
Well, if you've made it this far, then I'm pretty sure you found that as interesting as I did. If you haven't already heard, Exponential Risk London is a new 2-day conference hosted by Instech, dedicated to addressing the evolving needs of the global catastrophe and climate modelling community. Tickets are now on sale, and hopefully we'll see you in March. That's all from us this week. Goodbye.